All right, what's good, everyone? It's Fearing. It's currently August 2nd, 2025. I'm here to give you guys the video on the checklist to my model. This is part 2 of 4. The previous video was on the introduction. The next 2 videos will be on narrative and draw on liquidity. So, in order to understand this concept, assuming you're coming from the Fear intro, of course, you should have watched that. I should have also watched all the WAP videos and the 4 channels in the server that are labeled as this. Go watch those before you can move on. So, this checklist will be done in the sense of a trade review format, and the first point of our checklist is to understand higher time frame narrative. So when it comes to higher time frame narrative, you have to understand first where price is relative to 2 things: our higher time frame market maker buy model, or any market maker model, sometimes we're in a market maker sell model, but relative to where price is relative to our higher time frame market maker model slash power 3. So we'll reference this. As we can see here, when we zoom out a bit, we can see price is clearly bullish. For those who've been in the server, been attending our weekly calls, daily calls, you guys know that we've been aggressively talking about how price is delivering and completing a daily market maker buy model. As we can see right here, our original consolidation, first stage reaccumulation, smart money reversal, and now here we are, delivering from the first and second stage redistribution. Now we're trading above all-time highs. So narrative here on the higher time frame is very clearly bullish. When we zoom in closely in the sense of how ICT explains institutional order flow, we are currently respecting down close candles in the sense of a recent market structure. So narrative here, just strictly based off market structure, is very clearly bullish. There's no reason to overcomplicate it here. We're just very clearly bullish. And now let's look at what we see when price opened up within this current weekly power 3, which is going to lead to the trade we take. As we can see here, within our current weekly power 3, we open up, and what do we do? Now it might look like we're just going to accumulate here, but what do we see? Look where YM ran out. YM ran out the previous week low, while ES and NQ both failed to do so, giving us immediately a monthly cycle score and show some T at the lows, and nothing at the previous week high, nothing at the previous day high. So within the current weekly power 3, we have sequential SMT at the lows, no sequential SMT at the highs. So immediately narrative here points to be bullish. So a video you should have also watched, and this actually goes a lot more in depth, is the interlinking power 3 with market maker models refined with QT WAP lesson, and that breaks it down in a lot more depth. So like we just talked about here, that's everything we wanted to cover. So next part of our checklist is clear draw on liquidity. So kind of just covered that here when I was talking about the previous day high, previous week high. We have a clear draw on liquidity above us. Let's specifically go back to market open here. Oops, we're actually right before it. So going into market open here, what do we see? We have monthly cycle sequential SMT at the lows. The previous week high is unmitigated. The previous day high is unmitigated. On top of that, internal structure, we have daily cycle sequential at the lows right here and here. And Q failed to run it out. YM and ES both did. From there, we have daily cycle sequential SMT at the lows. And within our daily power 3, we have no sequential SMT at the highs. So in terms of clear draw liquidity, we have clear draw liquidity higher. For starters, we can clearly, draw towards a gap fill of our current weekly new log. So that alone is already clear draw liquidity, and at the highs, there's no sequential SMT. So immediately narrative is bullish, draw liquidity is higher, pre-day high, pre-week high, new log fill, all clear draws on liquidity. And in general, and that's just for the sake of that trade, but in general, we are always looking to target time-based highs and lows, which is going to be our quarterly theory highs and lows. So our previous month high and low, aka our quarterly cycle highs and lows, monthly cycle highs and lows, weekly cycle highs and lows, daily cycle highs and lows, 90-minute cycle highs and lows, and microcycle highs and lows. Now, of course, we're not always going to have a clear high low that we can target. Sometimes we have to trade based off of internal structure. So instead of just targeting highs and lows, we can look to target higher time frame PD rates, specifically unmitigated higher time frame PD rates, and even more specifically and most ideally, a unmitigated imbalance. So a 4-hour BISI or CIBI that is unmitigated, has not been traded into, something like that. Doesn't have to be a 4 hour, it could be any time frame, but you get the point. Now, EQ of the range as well acts as a clear draw on liquidity, as if a range is unbalanced, we understand that that range must be balanced before we can continue in any given direction. So that also acts as a clear draw on liquidity. So highs and lows, time-based highs and lows, higher time frame imbalances, unmitigated higher time frame imbalances, and unbalanced ranges EQ. The third part of our checklist is higher time frame sequential SMT. So as we just covered here, we have monthly cycle sequential SMT and daily cycle sequential SMT. Technically speaking, those both act as a higher time frame sequential SMT. When we look at intraday structure, that is our higher time frame sequential SMT. When we look at weekly intra-week structure, our higher time frame sequential is the monthly cycle. So we have two types here. The monthly cycle acts as our higher time frame sequential for our weekly power 3, and then within our daily power 3, the daily cycle sequential acts as our higher time frame sequential SMT within there. So let's just say we're focused on strictly the daily power 3. Our higher time frame sequential here is the daily cycle sequential SMT at the lows. So boom, that is checked off. Third point, a lower time frame sequential or lower time frame crack and collation. Now, arguably this can be acted as two different parts of the checklist, but in this circumstance, in this example, what do we see at market open? 9:30. Oops, we're a little bit behind. Or I'll go up to 9:30. 9:30 opens up, and what do we see? So we see a few things. And Q manipulates down into discount. And actually, before this, let's reference the chart. So here on the 5-minute time frame, we have a lower time frame sequential, which is our 90-minute. So we had our higher time frame sequential, which was the daily cycle, and now on the 5-minute time frame, we have 90-minute sequential. And Q at market open opens up, manipulates down into discount of the daily range, forming 90-minute sequential. Now, as you guys know, according to the time frame alignment video and the other videos that you should have already watched, you know that we still want to see some sort of lower time frame cracks and collations before going down to the 1-minute. So since we have daily cycle sequential, we would want to see a 15-minute swing divergence to then validate dropping down to a 1-minute. For the 90-minute sequential, we would want to see a 5-minute swing divergence to drop down to a 1-minute time frame. So in the circumstance, since we have both daily cycle and 90-minute, we can validate looking at both time frames. And here, when price opens up, manipulates down into discount, into this discounted 15-minute SMTF, we can see that we form a 15-minute PSP swing divergence, which I'll make it very clear here when we zoom in. 9:30 is a down close candle on NQ, down close candle on ES, up close candle on YM. NQ soups the 15-minute down close, while YM fails to soup the up close at 9:30, giving us a 15-minute PSP swing divergence. On top of that, we also have a 5-minute swing divergence at the same point that we had the 50-minute swing divergence. So a 2-in-1 lower time frame crack and collation. There, we can then validate looking for a lower time frame CISD, which is what we have here. So in this circumstance, there is no clear 1-minute CISD to enter off of. In this circumstance, this was the 1-minute time frame right here. We had a 1-minute PSP swing divergence, and if you watch validating a 15-second time frame video, you know that we can then validate dropping down to a 15-second, because here there's no clear 1-minute CISD to enter off of, unless of course you're looking to enter all the way up here, which we would not be doing. So we have a 1-minute PSP swing divergence, drop down to a 15-second time frame, and enter off the next 15-second CISD. And it's a little bit hard to see that there, so I'll mark it out on the trading view chart right here. As we can see, 15-second CISD, entry there, stop loss at the low, where all of those swing divergences, aka lower time frame cracks and collations, stack up, and then TP at the high of the range, and we get a 3.5 risk reward, which is right around the average of how this model, of the risk reward that this model gives us. And that is our checklist. Again, pretty simple, five-point checklist. Obviously, the hardest part is understanding narrative drawn liquidity. So be prepared for those lessons. Those lessons are really just an introduction to the concepts. A lot of your learning is going to be from the trade reviews and live calls, but nonetheless, I want to give you guys some sort of introduction to understanding narrative and drawing liquidity. So hope you guys enjoyed, and I'll see you guys all in those videos.